already backed some well-known names in the VC space. I'm thinking of Cohere, I'm thinking of CoreWeave. Why go more focused and have a fund, a more than $200 million one at that?
Yes, well, thank you for having me on. I think because of that, because of our experience in AI ML investing going back to 2021 with CoreWeave originally and now also Cohere, we feel like we have the relationships and the expertise in the space, as well as just the time and the unique opportunity it is with all the capital going in. And finally, it's because we have a really unique product offering, both the support of Magnetar and also the dedicated compute on the CoreWeave cluster that we think just provides unique value to the potential portfolio companies.
And so your fund has a really interesting structure where it's providing your portfolio companies with compute in exchange for equity. Tell us how that works and how you determine how much compute is worth how much equity.
Mm-hmm. Yes, so we've contracted compute that's dedicated GPUs for this purpose with CoreWeave. And so potential portfolio companies will get access to the compute in exchange for equity. So like any other investment, it'd be a negotiated process on the value. But the important thing is that it solves a lot of problems for the company. Like oftentimes there's this chicken and egg issue where it's hard to contract compute if you don't have the capital. It's hard to raise capital if you don't have access to the compute. So potentially we're solving that problem by providing a direct exchange of the equity for the compute on CoreWeave's, what we believe is the top performing high performance compute cluster.
And so how are valuations looking when it comes to Gen AI companies? Is there concern that with the hype in the space that companies might be either overvalued or equity might be expensive?
Yes, well, I mean, at least we've had a little bit of pause on that. But I think it's hard to generalize. Part of our investment process is to focus on companies that have both internally the right management team, the right technology, the right moat, but are also in the right parts of the AI stack, whether that's applications or verticals where it's hard to separate the pieces so that we can be confident they're creating value.
Jim, I know a lot of firms that want to hold both private and public equities, right? And they try and work out the best mechanism or vehicle to do that. Then you have like the mutual funds who are increasingly high up the cap table for growth stage names. With that in mind, why the venture vehicle specifically? What's the benefit of launching a dedicated fund like that?
Well, I think it's the structure and the unique value proposition. So the reason it's a dedicated fund is because the fund is specifically offering compute in exchange for equity. In our other funds, we've historically invested across the cap structure in public equities, private equities, structured debt. But here, because of the unique value proposition and the way we've contracted the GPO cluster, it makes sense to offer it as a dedicated fund.
It's so fascinating that almost you're going up against, well, this is how AWS, Amazon has got in with a lot of these strategic investments. I'm sure they're offering the compute, the Microsoft. What's the relationship you now have with CoreWeave to be able to ascertain and ensure that you get that compute? Is that kind of a deal that you struck with them? And they're happy, of course, to have yet more and more demand coming via you, I'm sure.
So we've been close partners with CoreWeave for a number of years now, both in providing them capital and just generally providing Magnetar resources to help them grow their business. And so this just was sort of the next step in the evolution of our relationship where we felt like between us we were in a position to offer this product. And we were able to work with them on contracting the compute and arrange the fund such that we can deliver that compute in exchange for equity.
And compute in hot demand, but give us some context. If a company is doing a funding round, roughly how much of that money raised could be spent on compute?
So it really depends on the company and how intensive their compute needs are. So if it's an application developing firm, it may be something on the order of 25% of a cap raise might go to compute if they're developing some particular application. If it's, for example, an LLM company that's really developing large models, then as much as 75% or more of a particular cap raise might be allocated to high performance compute.